We'll call the Senate Property Tax Subcommittee to order. We have a quorum present. Today, of course, on the agenda, we have Senate File 3706, which we will mark up, and the intent is to pass it on to the full tax committee. At this point, Senate File 3706 is taken off the table. We do have a technical amendment at this point, and I will turn it over to Mr. Sylvia for explanation.
Mr. Chair and members, you have before you the A2 author's amendment. Mr. Arnson and I will walk through line by line for the amendment. Line 3 makes a change to the effective date for Article 1, Section 2. This is the property tax exemption for tribal-owned property. This just clarifies that the effective date beginning with assessment year 23 rather than only for assessment 23. Lines 4 through 14 make changes to Article 1, Section 8. This is the Affordable Housing Market Value Exclusion Program establishment. The changes made here include allowing the municipality to post notice of its meeting on the municipality's website rather than twice in a newspaper of general circulation, which was included in the bill as rolled out. These sections also require the property owner to actively market the available affordable units. It removes reference to greater of state or area median income. And lastly, it clarifies that the exclusion applies to new construction constructed on or after January 1st, 2023, rather than January 1st, 2022, which is in the bill currently. Line 15 makes a change to Article 1, Section 14. This is the section that defines attachment and appurtenances for cooperative utilities. In the bill, it clarifies that metering and street lighting equipment is included within the definition of an attachment and appurtenance, and we are simply adding clarifying language to make clear that metering and street lighting is included, but it is not limited to the attachment and appurtenance definition. The remaining sections, Mr. Chair, Mr. Arneson will walk through.
Mr. Chair, line 16 of the amendment makes a change to the riparian buffer credit section and increases the credit amount from 50% to 100% of the net tax attributable to the buffer. Lines 17 and 18 clarify that the buffer credit is calculated for land that meets all of the eligibility criteria, including the criteria related to enrollment in conservation reserve program. And finally, lines 19 through 30 provide that the electric generation transition aid for school districts is appropriated to and paid by the Commissioner of Education in the same way that other aid programs that are in the taxes community jurisdiction that are applicable to school districts are kind of split in this way between school districts and other taxing jurisdictions. And that concludes the summary of the A2 amendment, Mr. Chair.
Very good. Thank you, Mr. Arneson. Thank you, Mr. Sylvia. Any final words, Mr. Sylvia?
Nothing additional. I believe Mr. Wilms can walk through any changes to the spreadsheet.
Okay, and please proceed with the spreadsheet information.
Thank you, Mr. Chair and committee members. The spreadsheet published today reflects changes contained in the technical amendment that was just provided an overview for. You'll note in the top right corner of the fiscal tracking spreadsheet, the timestamp is May 2nd, 4 p.m. There's two changes of note versus the spreadsheet that was distributed yesterday. The first one is on line 19. That reflects the riparian buffer credit at a 100% rate instead of a 50% rate. The practical effect is that the FY24 amount is 0, and now the FY25 amount is $8.6 million. Additionally, the change to the affordable housing market value exclusion program on line 32 of the spreadsheet. The previous version had an unknown amount of property tax refunds being paid. This was tracked in FY25. This will now is expected to occur in FY26. And that concludes the changes relative to the spreadsheet that was issued yesterday.
Thank you, Mr. Wilms. Members, there was an email that came from the department yesterday. Mr. Sylvia has worked with them. It's my understanding he has included most of the items that satisfy the concerns on language changes. There's one item, I believe, that the memo varies from the phone conversation he had last week, and they will continue to work on that. And we can always, if there are necessary changes, obviously this will have its day in full tax committee as well. Most of the items, as you will notice, the total on the spreadsheet remained the same as yesterday. That's because of even though we increased the buffer strip credit, because of the timing changes both on that and the electric transition aid, sort of pushed items off the spreadsheet. However, that by doubling it again, or bringing it back to the original amount, it left that number the same. And so, are there any questions concerning the amendment at this point? If not, I move the amendment. All those, A2 amendment, all those in favor signify by saying aye. 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 Opposed, same sign. Motion's carried. Amendment is adopted. At this point in time, we will open the floor for testimony. After that, we will then open the floor for additional amendments. And our first three testifiers today are Beth Cadoon, Jill Larson, and John Reynolds. Please come forward to the testifiers table, and we will go through our list here and then open it up for anyone else if they choose to testify. Welcome, everyone. You know the routine. Please identify yourselves for the record and proceed when ready. Ms. Cadoon.
Thank you, Mr. Chair. Members, my name is Beth Cadoon. I represent the Minnesota Chamber of Commerce. I'm also here on behalf of the United for Jobs Coalition. You should have a handout in your packet that lists the over 100 business association, local chambers all across the state that are in strong support of your provision, Mr. Chair, to reduce the state levy as well as ultimately phase out this high regressive tax of doing business in our state. This high fixed cost, by reducing this high fixed cost, will make our business climate more competitive, as well as providing relief for businesses all across our state. As I have testified previously, this tax is much higher than all of our neighboring states, sometimes nearly twice or 3 times as high, so it's important to get this tax reduced. As I mentioned, this will also reduce a regressive tax. As Department of Revenue's tax incidence studies have found, this tax is ultimately paid by consumers in higher prices and employees as less money is available for wages and benefits. A policy concern we always have when we're looking at the property tax is the tax shifting that can occur. The benefit of the state levy reduction as it does not shift taxes onto other properties, and it helps those Main Street businesses as well as businesses with physical locations in our state. We do support the increases in the property tax refund programs as the best tool to help target tax relief to those homeowners that may need some relief. As this tax negotiations continue, we would urge your consideration of impacts of any tax shifting that may occur, as well as to always consider those important policies goal of taxpayer transparency and accountability so that taxpayers better understand their cost of local government services. We thank you again for the inclusion of the state levy phase-out. We know a strong and growing Minnesota requires a strong and growing private sector. This will help encourage entrepreneurship, private sector investment, and business growth. Thank you.
Thank you, Ms. Cadoon. Next, Ms. Larson.
Thank you, Mr. Chairman, members. My name is Jill Larson. I'm with the Minnesota Business Partnership. I will be very brief. I'm simply going to echo Ms. Cadoon's comments. I've also submitted some written testimony for your review. We also appreciate the provision in the subcommittee report that reduces and ultimately phases out the state general levy. You heard from Ms. Cadoon today, and you heard in an earlier committee hearing this session from several testifiers about how the levy makes Minnesota an extreme outlier. And this provision, as it phases out over time, will help make Minnesota more competitive as businesses look to make decisions about where they're going to locate or relocate, especially given the fact that the work environment is changing with a clear trend toward remote work. And as businesses reevaluate their commercial space needs, we want to make sure that Minnesota is a place that they want to be. So this provision about the state levy will help make us more competitive. Again, thank you for including it in the report.
Thank you, Ms. Larson. And Mr. Reynolds.
Mr. Chair and members, thank you for the opportunity to testify. I'm John Reynolds, State Director for the National Federation of Independent Business in Minnesota, where the NFIB represents over 10,000 small businesses in every corner of our state. First, thanks to Chair Weber and the members of the committee for their work on this property tax report. NFIB strongly supports the reduction and gradual elimination of the statewide general property tax. As Ms. Cadun and Ms. Larson said, this tax is one of many ways in which Minnesota is an outlier, and it's a hindrance to Main Street growth and competitiveness. The general levy often accounts for over 20% of a small business's property tax bill, and like I discussed when we heard the three bills in committee before, they owe this regardless of whether they're closed down, regardless of whether they're making money, regardless of whether or not they can find the supplies or workers to fill orders. NFIB also appreciates the inclusion of the agricultural riparian buffer credit, which will help family farmers who have not been able to take advantage of CREP or other financial assistance mechanisms. So again, we thank the committee and we urge your support.
Thank you. Next, we will turn to Ward Inus, Paul Egger, and Eric Bernstein. Welcome to the committee, gentlemen. You may identify yourself and for the record and proceed when ready. Mr. Inus.
Chairman, members of the committee, my name is Ward Inus here on behalf of the 4D Coalition. The 4D Coalition is a group of 15 affordable housing developers, both for-profit and nonprofit, that probably construct, preserve, and manage 80% of the affordable housing stock in the state of Minnesota. And as you know, Chairman, they've coalesced around the issue of modernizing and updating the 4D property tax program. And I really want to extend our appreciation to the chair and the rest of the committee for inclusion of the 4D reforms in the Senate tax bill. As you know, Chairman, we've had a lot of conversations about this issue over the last couple of years, and especially over the last 12 months with you, and really appreciate your engagement and leadership on this issue. I think your experience as both an appraiser and a local government official has markedly improved the proposal as it sits before you today. The inclusion of a municipal consent provision, the inclusion of transition aid in the bill, I think has really brought the program, or the bill, has markedly improved the bill. I want to impress upon you, Chairman, and the rest of the committee, just the importance of getting this done this year. We've been talking about this issue for 4 or 5 years. Senator Chamberlain was an early adapter and included this in multiple of his tax bills early on. And so the proposal has evolved, it's improved. If we don't modernize and update the 4D program, the environment in Minnesota would not be very hospitable for the continued development of affordable housing units. We all owe a debt of gratitude to Senator Rest. She was the original architect of the 4D program, but even she would acknowledge that the program needs to be updated, modernized to reflect the economic realities that affordable housing developers are facing today. So I really appreciate your continued leadership on this issue and look forward to continued discussion in the conference committee. Thank you.
Thank you. Mr. Egger.
Thank you, Mr. Chair, members of the committee. My name is Paul Egger. I'm Senior Vice President of Governmental Affairs for the Minnesota Realtors Association. Thank you for the opportunity to testify this morning. Minnesota's lack of adequate housing supply continues to be a serious and chronic challenge to both buyers and the housing market in general. Our members see firsthand every day how the lack of housing supply to meet the sustained high demand increases market values, and they are concerned about the potential for large property tax bills for homeowners around the state. We think it's important to provide property tax relief, particularly direct relief to property owners this session. We appreciate several items in the subcommittee report, including modifications to the targeting property tax refund, which provides direct tax relief to homeowners who have large property tax increases from one year to the next. The increases in the bill to the homestead market value exclusion value thresholds. These thresholds are not indexed and have not been increased for at least a decade. Just for some context, I looked up the median sales price of a home 10 years ago, and it was $149,000. In 2021, it was $306,750. That's a 106% increase. So I think changing these market value thresholds right now is a wise move and will be helpful to many homeowners around the state. We also support the reductions too in the phase out of the state general levy for both CI property and seasonal rec property. We believe the property tax should be reserved as a local funding mechanism, so appreciate your inclusion of that item in the report. And then we think the modifications in the report to the senior citizens property tax deferral program are reasonable and provide an option for seniors struggling to pay their property taxes to age in place. Mr. Chair, we do think that one item is missing from the subcommittee report, and that's increases to the homestead credit refund program, which provides direct relief to homeowners whose property taxes are high relative to their income. Another strength of that program, in addition to being a direct relief program, is that it is a state-paid refund and does not shift property tax burden from one property type to another. We hope that you'll be open to increasing PTR refunds as the bill moves forward this session. And finally, just to echo some previous testimony from Ms. Kadoun, while we appreciate the challenge of assembling the subcommittee report within the constraints of your target, we hope that as the bill moves forward, you continue to look for opportunities to minimize the shifting of property tax burden onto other classes of property, including onto residential homesteads, when providing relief through means other than direct relief to taxpayers. And thank you very much for the opportunity to testify this morning.
Thank you, Mr. Egger. And then, Mr. Bernstein.
Senator Weber and members of the Senate Subcommittee on Property Taxes. My name is Eric Bernstein. I'm Policy Director at We Make Minnesota, which is a coalition of labor and community groups united in support of a more equitable budget. Thank you for the opportunity to testify today on Senate File 3706, the Property Tax Subdivision Report. I'm here today to express our disappointment with the phased-out elimination of the statewide property tax. Ending the state property tax would cost more than $4.2 billion over the 13-year phase-out period, and over $1.5 billion each biennium after that. This is money our state needs to fund the roads, utilities, and other physical infrastructure that make commercial and industrial properties operable. It is also money needed for the schools, parks, and other collective investments that make for vibrant communities and viable businesses. Ending the state property tax means that Minnesotans will not just lose funding for their communities, but will lose again when property tax cuts for businesses must be made up in other revenue. DOR's tax incidence study shows that the state property tax is the most progressive component of Minnesota's local property tax system. And so so eliminating it means higher income Minnesotans will pay, that means Minnesotans pay a proportionally larger share of state levy as compared to local property taxes and other revenue streams. The incidence also shows that nearly half, 49.5% of the statewide property tax falls on taxpayers outside of Minnesota. This is unsurprising if we consider many large multinational corporations that own and operate real estate in Minnesota. As a result, ending the statewide property tax will not only make Minnesota's overall property tax system more regressive, it will also import a tax burden that is currently borne by out-of-state shareholders. That's a bad deal for Minnesota, and it's the opposite of the direction we should be going. The state levy's already been falling as a result of statutory changes as well as inflation. Businesses depend on well-maintained communities and a well-educated population, and it is highly appropriate for them to contribute to that mission. Overall, Minnesota property taxes are average, ranking 18th or 19th in the country. So to the extent the state considers property tax relief at all, it should be targeted at lower-income families. Along those lines, and in closing, I'd just like to say that I understand Senate leadership has prioritized tax cuts this session. And there are undoubtedly many Minnesotans who agree with you that tax cuts should be a priority. But I'd encourage you to ask yourselves what they would think of this proposal. I stopped by the Give It Back rally a couple weeks ago, and if we told that room that we wanted to end the corporate property tax before we prioritized other sorts of tax cuts, I don't know that it would have gotten that many cheers. So thank you for having me today.
Thank you. And the last two on the list are Joel Carlson and Assistant Commissioner Kloxing. Good morning, gentlemen. Identify yourself for the record and proceed when ready. We will start with Mr. Carlson.
Good morning, Mr. Chairman and members. I never thought that reading the Property Tax Division report would be more fun than watching a Wild playoff game, but I'm afraid I'm afraid that's the case. Mr. Chairman and members, Joel Carlson, I represent the community of Minnesota Resorts, and I just want to thank the committee for including Article 1, Section 9, that addresses the property tax tiers for homestead resort properties. This is a significant issue, and as you all have talked throughout your deliberations about the rising property values, this is a significant improvement. We appreciate your including it. And Senator Chair, look forward to working with you to see if there is a new way that we can assess these properties to more accurately reflect their value and use. Thank you.
Thank you. And then Assistant Commissioner, welcome.
Thank you, Chair Weber and members of the committee for the opportunity to speak today. For the record, my name is John Kloxim. I'm an Assistant Commissioner with the Department of Revenue. First, I want to thank you for the work and discussions this committee has done the last couple of months. Property taxes are an important funding mechanism for local governments, and the policy choices here have real impact on the lives of Minnesotans. With the increased value of homes in the current housing market, many homeowners are seeing their home's value increase more than they could have expected, highlighting the need for the state's property tax refund programs. I want to thank the chair for including the governor's proposal to increase the income limit and reduce the ownership requirement for the senior citizens property tax deferral program. These are important changes that will make sure the current enrollees keep this benefit while also allowing more seniors to access this tool. We are concerned about the financial impact this bill will have on the state and local governments. The repeal of the statewide general levy will cost the state $1.5 billion over a biennium once it's phased in. And that is not reflected on the spreadsheet since it falls outside the budget window. Secondly, we're concerned about the lack of safeguards with the affordable housing market value exclusion. This program will provide a 50% reduction for luxury apartments if a small portion of the building is reserved for people whose income is 60% of the area median income at the time they move in. Lastly, Governor Walz proposed a buffer credit in his first budget to address some of the challenges facing farmers. We share the commitment to providing farmers with property tax relief, whether that comes from the buffer credit or the school bond credit. We look forward to working with you to make sure the credit can be administered at the state and local level. There are a couple of new property tax aids, credits, and classification changes that we will continue to review to make sure they are municipal as intended. In the coming weeks, we look forward to working with the tax committees to ensure a fair and equitable tax bill for all Minnesotans. Thank you.
Thank you, Assistant Commissioner. Are there any other people in the audience that would like to testify? Very good, thank you. I just would mention in response to one of the comments made by the Assistant Commissioner, the exemption amount for multifamily housing will require both the approval and of the cities and the counties involved. And at that point, those entities will have some opportunity to put in provisions that can ensure that it develops housing in the manner in which they believe is most important for their community. And so with that, members, I will open the floor for any amendments you may have. Senator Klein.
Well, thank you, Chair, and thank you for the transparent and honest way you've run the committee this session. It has been a pleasure to serve as the minority lead on the committee. I think both parties agreed coming into this session that the most urgent concern before this committee was the rapidly rising home valuations in the state of Minnesota and the impact that was going to have on people's property taxes. And in a season of surplus, that was our prime directive to address that. And I think you've done that in a bipartisan way and a responsible way. The minority has not prepared any amendments today, but just a couple comments on the bill. Of course, we're grateful for the inclusion of the homestead market value exclusion, Senator Rest's proposal, and the senior citizens property tax deferral, my proposal. I think reforms to the 4D taxation system are thoughtful and good and will improve access to affordable housing in the state of Minnesota. Glad that we are addressing agricultural buffers. I think the choice of the TIF projects that were included in this bill were the right ones. And I'm grateful for the inclusion of the veterans disabled veterans' spousal benefits as well. We have two significant concerns as this bill, goes into conference committee and goes into the general tax bill. One is the large cost of the elimination of the general levy over several years, which is cut off of the spreadsheet and is not reflected in sort of our budget forecasts. And that's a source of concern because of the large impact on the general revenues and also because we can't see it on a spreadsheet. And then the lack of any sort of addressing of local government aid and county program aid, again, in a season of surplus and in a system where that formula is outdated and several cities are not responsibly being addressed. Several proposals were brought forward this year to bring that up to date, and I hope that those can be addressed as we move into conference committee. And thank you, Mr. Chair.
Thank you, Senator Klein. Any other comments? Senator Murphy.
Thank you, Mr. Chair. And thank you, Senator Klein, for your reflections. I do, just so we're on the record, Chair Weber, want to know if it is the case, or maybe I shouldn't ask the question. Can you tell us why the action with the general levy in the reduction, as you say, something you wanted to wrestle with and you are in this proposal, why it is completely off the spreadsheet in this, as Senator Klein says, this season of surplus? Why wouldn't we tackle this now and begin to reflect it in the spreadsheet now?
Well, Senator Murphy, it's my understanding that that there are always a number of things that as they go out multiple years, that they do wind up off the spreadsheet. And the initial cuts that we are making in the general tax levy obviously are reflected there. And then we're setting the framework up for those further reductions in future years. And so, our spreadsheet, the spreadsheets are the spreadsheets. That's the way they have always been developed. And I think we all recognize that that total tax, which today totals approximately $760 million a year, is indeed a sizable amount of money. It's an amount of money that was started to be collected by the state at a time when we had budget shortfalls. And quite frankly, it is an amount of money that today creates barriers to the retention and development of business in Minnesota. And it's always a fine balance that we have to arrive at in order to have a vibrant business community that provides jobs for our people, that also provides a substantial amount of tax revenue, both for local units of government and for the state as a whole. I look at projected developments that are being worked upon even in my local communities, and those that require huge investments in real estate wind up having a tremendous tax burden placed on them, both from the state and federal government in terms of income tax, if they are profitable, and also from a real estate tax standpoint. Our commercial industrial rates, shoreland recreational rates are the highest rates of our property tax system. And when the state starts to piggyback on top of those to bring in money for the state coffers, it creates a situation that is untenable and I think prohibitive for development, for expansion, and for a creation of a vibrant business economy that is necessary to help propel all Minnesotans along.
Mr. Chair.
Ms. Senator Murphy.
Thank you, Mr. Chair, and I appreciate your advocacy on the policy. Not that I disagree with the policy. I am, thinking about the work of this body on the whole, especially when it comes to tax policy and tax cuts and the work, for legislatures in the future. And, my commitment to balanced budgets, structurally balanced budgets. And I worry when I think about the, in total, tax cuts that we are seeing and the spending that is the result of that. So I'm just flagging it because, in 2 years and 4 years, especially if we encounter a recession, we are taking on a significant obligation that we, may have to reconsider. And I just want to flag it because I think it's important for the fiscal integrity of our work.
Very good. Thank you, Senator Murphy. One other comment I would make in response to the point you made. In visiting with Senator Bach, he talked about a time when the state of Minnesota taxed all corporate earnings, not only those that were earned in the state of Minnesota, but those that were earned outside of the state of Minnesota as well. I believe it was in the late 1990s that the state developed an allocation system whereby we would tax only that portion of their profits that were generated by Minnesota activity. He didn't remember exactly, but he thought it was like a 13, 14-year phase-in period. Those numbers would not have shown up on the spreadsheet either at that particular point in time. But it was an element that needed to be dealt with. It was an issue that was dealt with, and certainly those, unfortunately, those are the only way at this point that we can deal with them. I think that the issue is in front of us. It is transparent to us of what we are doing in that scenario, and so I respect the point that you made. But I do believe that we are accomplishing that transparency and the reality of the situation. Senator Jasinski.
Thank you, Mr. Chair. And just a comment again, kind of continuing on your thought process, I agree with everything you said about eliminating the commercial industrial tax on property taxes. People look at that property tax statement and they always think it's the locals, and it's the local officials that have to do the services and the fire and the protection and the roads and things like that. I think a comment was made by Mr. Bernstein from We Make Minnesota about by doing this takes money away from roads and bridges. Well, I sit on transportation, and in the general fund, less than 0.5% goes to transportation, and 0.25% of the 0.5% goes to roads and bridges. So it makes a minimal effect on what goes towards roads and bridges. Thank you, Mr. Chair.
Thank you, Senator Jasinski. Senator Chamberlain.
Yeah, just a quick comment. I think the other thing too with the CI tax is the argument's been made over the years, Senjum and others, that kind of the idea too is that, not that I'm advocating that if the CI goes away, that the locals take it all back in their taxation, but that's kind of what tax base is about too, is it gives the local communities a little more flexibility instead of completely soaking them twice. So there's a lot of different processes and angles and ways to look at this as well. Thank you.
Thank you, Senator Chamberlain. I would just finish up the comments by stating that, as you all are aware, a week ago, I started throwing out possibilities in reaction to the comments that senators were getting from the public concerning the property value statements that had been sent out on the heels of the property tax statements. And we work in a very combined manner with local government as it relates to property taxes. And, and some of the local county, local city and county representatives who were here that meeting asked me afterwards, what do you hope to accomplish by a property tax freeze or value freeze? My comment was, one of the benefits would probably be an education to the general public as to what actually makes up their real estate tax statement. And we as the state government affect local levies from the standpoint of what we pass or what we don't pass. Over the years, the state has shifted a number of elements of cost onto all units of local government. Whether we're talking to the county level with child protection, with court costs, the increase that they have realized there are generally because of actions that a state legislature has taken once upon a time. When it was decided some years ago, again, during a period of financial shortfall, the state of Minnesota came to the cities and said, well, would you prefer a cut in LGA, or would you prefer to start paying sales tax on your capital purchases? Well, they viewed that maybe paying the sales tax was the least problematic for them. It's sort of like asking How do you want to be executed, with the rope or by the gun? At the end of the day, we do influence local government costs by what we do here in the legislature, by the budgets we pass. And I hope that as we go forward in the future, we may become, as a legislative body, more cognizant of that fact. And that one of the elements that we ask ourselves when we pass a budget in some other area of state government, what is the net effect? Not only in terms of the people that it affects on a daily basis, but of the local government that has to basically absorb those costs or do away with the service in the first place. And so with that, if there are no further comments, Senator Chamberlain.
Those are great comments, I agree. Great comments, agree 100%. And listening to testimony and having been here for a while and reading through all this, it looks like you pleased everybody here, right? This was, everybody's happy with something, aren't they? Anyway, thank you, Mr. Chair.
Thank you. With that, members, I move that Senate File 3706 as amended. Excuse me. We need to vote on the A2 amendment. All those in favor of that amendment signify by saying aye.
Aye.
Opposed, same sign. Motion's carried. With that, Mr. Sylvia.
Mr. Chair, we did adopt the A2 to the A1. The next step would be to adopt the A1 delete all amendment as amended.
Gotcha.
And following that would be the final motion.
Okay, very good. I would move the A1 amendment as amended on to Senate File 3706. All those in favor of the motion signify by saying aye. Aye. Opposed, same sign. Motion is carried. With that, committee, I move that Senate File 3706 as amended be recommended to pass.
Wait, is that 37 or 30? What is it?
3706.
Okay, I got you.
Be, as amended, be recommended to pass, I think he's trying to screw up the chairman, and be sent to the full Senate Tax Committee. All those in favor of the motion signify by saying aye. Aye. Opposed, same sign. Motion is carried and hereby passed. Everyone, before we adjourn this meeting, I would like to take this opportunity to thank all those individuals who have helped put this committee together and service our needs. First, our pages, Julie Stroeve and Anna Von Kampen. Our fiscal analyst, Jay Wilms, Bjorn Arneson, our legislative analyst, Eric Sylvia and Nora Pollack, our Senate counsel. Research people, DFL Research, Krista Broughton, and Republican Research, Dan Mickelberg. Our committee administrator, Brian Steinhoff, and my CLA, the committee CLA, Lamont Pikanen. I also want to take this opportunity to thank Senator Rest. I assure you that she's not a member of this committee, but she watches us while we're on our Zoom meetings. As she is the Dean of Taxes and Property Taxes, and I truly do appreciate her input and guidance as we deal with tax increment issues. And so here's a shout out to you, Senator Rest, as I know you're probably watching us this morning as well. And also, I want to thank the members of the Senate staff, such as Dom, who have come down and helped do the spotting for our Zoom, our hybrid hearings. And I want to compliment the Senate staff. This is not an easy room in which to accomplish hybrid hearings, and I think they have done as good a job as they can possibly do, and I thank them for that. As a tax committee, we, of course, do not have the normal requirements on us. We can meet again, and if something comes up for which we do need a meeting, we shall. But with that, everyone, thank you all, and also thank you to the members. My vice chair, Senator Chamberlain, the minority lead, Senator Klein, members, Senator Jasinski and Senator Murphy. I thank you for your attentiveness, attendance, and input to the committee. And with that, everyone, we stand adjourned. Thank you.